Well, markets were surprisingly resilient, and in fact, while the GIFT Nifty also indicated at least 160 odd point uptick at the start of the day, we just went from strength to strength as the day went by. 230 points higher is where we closed in at. In terms of stocks, banks underperformed a bit, and that has continued, especially on the private banking side of things. But IT, that was the big mover. And in terms of contributories, within the IT packet was Infi. It was, which was one of the largest contributors, but outside of that, you saw very good breadth across the Nifty IT. Pretty much all stocks trending in the green. You've got the likes of an Eternal, a Bajaj Finance, an ICICI Bank, and M&M, which were other key contributors. It was essentially the breadth which drove the Nifty 50 index higher, just 7 declines to 43 advances that we saw. The Nifty mid cap and small cap indices also gained 1% plus each. So some nice moves seen there. The Nifty 500 index also saw very sharp breadth, nearly 400 advances to just about 100 declines. Car Trade, KFin, RK Forgings. KFin and RK were on the back of numbers. Reddington was the other big movers. Agility, Loris, they were just a bunch of large movers in trade today. There was also the likes of a Concor on the back of earnings, which has done very, very well for itself. On the other end, there was Zentech, New India Assurance, MRPL, and SEM India. Those were just some of the losers in trade. ONGC, understandably, was the other one, which was down 4%. The sectoral tilt was also strong. We saw pretty much all sectors in the green, but the underperformers, defense, banking, finance, oil and gas, and energy to a certain extent. Those were the sectors which were actually trending lower or underperforming. FMCG, pharma, auto, realty, IT, all of those were trending higher, and some very decent moves on all of those names. But the F&O picture, let's try and contextualize how some of those trends have played out on Monday and what that likely means from Tuesday's day of trade. Sajid.
Thanks, Harsh, for that. The market holding off the 24,000 level, and what we saw today was shorts getting covered in for the July series. As a result of it, we've seen a rollover of nearly 50% to the next series, which is the August series there. The Nifty 50 closing nearly 0.96% in higher, and look at the open interest that rolled over 25% jump in open interest, and that's what the story is about. It's also helped by the fact that crude has fallen below the 90 level, especially the Brent to 88 odd levels there, and that helped market giving going for a shorts getting covered there. And we spoke about it in the morning as well, that there is going to be a short covering ahead of Tuesday's NSE expiry, and that's what we have seen in today's trade there. In the Nifty Bank, the index is up 0.7% in today's trade. Again, there too we're seeing a good amount of rollover happening, with open interest up nearly 23% for the August series. Look at the constituents of Nifty, and you'll see a lot of long positions getting added there, especially for the August series there. ICICI Bank, Axis, SBI, Kotak, PNB, all looking at long positions, except for an HDFC Bank and BOB and Bank of India, where we are seeing some short positions. It was pretty much longs and long positions getting added to the August series, while you're seeing some kind of unwinding positions from the July series there. But the call and put writing is something which we need to talk about today. Call writers unwinded their positions below the 23,800 levels as we entered into the July expiry there, and if you look at the August 4 series, which is the next week's expiry, again we saw some unwinding of positions for call writing, but there's good amount of put writing happening at 23,800, 900 and 24,000. But the distribution will show you that you still have 24,000 as a good resistance, and that's one of the reasons why the index didn't cross or didn't tested the 24,000 and then held on below that. If you look at the gainers from the futures point of view, you have stocks like KFin Tech, where there's 10.7% jump there. Concor is up more than 6.5%, and Loris Lab after the earnings up 6.7%. Among the losers, you have stocks like ONGC, which is down 4% as crude coal, cools down. There is some kind of unwind also happening for the position. Supreme Industries seeing an unwind of positions, and Bank of India is seeing an nearly 3.5% down there. look at what's happening in open interest gainers there. Bajaj Finserv, 30% jump in open interest. Titan is seeing a 30% jump, and M&M ahead of earnings is seeing a 30% jump in open interest there. Nippon Life, Ireda, and Force Motors all seeing some strong cuts coming in. That's unwinding of positions happening ahead of Tuesday expiry for them. But if you look at as a whole, we go into the Tuesday expiry with slightly lighter positions, 50% rollover there, and we're going to see some kind of activity in terms of position rollover happening on Tuesday. But a large chunk of that rollover is already done.
Okay, all right. Let me, in fact, set you up for trade tomorrow as well, viewers. Meryl here with some of the cues you want to keep on your radar.
Right, here are some of the major cues for investors to track on the 28th of July. In India, it's the monthly Nifty expiry, while investors will also be tracking India's industrial production data. Globally, the focus will be on the US's wholesale inventories data, while there's a lot of global heavyweights also set to report their quarterly earnings. These are the likes of Coca-Cola, Boeing, Visa, S&P Global and Barclays. Back home in India, it's a major earnings day as well. From the Nifty front, do watch out for Hindustan Unilever as well as L&T, or both set to report their quarterly results. Apart from the Nifty pack as well, we've got major earnings candidates, the likes of Varun Beverage, Suzlon Energy, Cholamandalam Investment and Finance, City Union Bank and many other such names set to report their quarterly results as well. On the corporate front, Transrail and a couple other companies are set to mull a fundraising, so do watch out for those names as well. And among other events to track, there is the Fortune list, which is going to be updated, the Fortune 500 global list of the world's largest companies by revenue. So do watch out for any additions or subtractions from that. Do watch out for back home in India, the Supreme Court set to hear the petitions related to NEET student protests as well. So these are some of the major developments that investors should be aware of when it comes to the 28th of July.
Okay, thank you so much for that, Meryl. Let me, in fact, go across. Rajesh Palvia joining us, Head Technical and Derivative Research at Axis Securities. Rajesh, strong move today. Can that sustain on Tuesday as well?
Good afternoon. So in corrective move, Nifty took support from its bullish gap area, which was created on the month of June at 15th of June. And if we go with the retracement of all this June to July move, almost Nifty took support around 61.8% retracement of entire rally of 23,060 to 24,530 kind of zone. So Nifty has shown very strong pullback from those level, and again this is the second day where we have seen Nifty has again continued its pullback trade. Looking at the data setup, major put writing has been witnessed at 24,000 strike, and call writers have covered their position from 24,000 strikes. So maybe we could see another up move in the tomorrow session also, as we have monthly expiry for July series. But looking at the short covering, we believe that this momentum can extend further, as cooling off on the crude is also giving some bit of confidence to the street. And I think the way most of the beaten down stocks have recovered are clearly showing sign that there would be another up move in the tomorrow session, and possible up move towards 24,100 to 150. We may see for the Nifty spot. So at this juncture, one needs to trail stop loss at 23,900 to hold the position. The similar kind of behavior we have witnessed for the bank Nifty also. Here also, it's a second day for the pullback action, and some of the large cap banking stocks are also showing sign of recovery from a lower level. NBFC basket is also showing sign of buying interest. The strengthening on the rupee front is also adding some confidence, and sentiment has also boosted by this move. So I think Bank Nifty is also poised to give breakout of the congestion zone, which is placed at around 57,300. And once Bank Nifty taken out this 57,300, I think we may see short covering towards 57,800 to 58,000 also. So at this juncture, one needs to trail stop loss towards 56,800 to hold position in the Bank Nifty also. We could see another leg of up move in the tomorrow session.
Any picks for tomorrow?
So two stock ideas, both on the buy side. First one is Samvardhana Motherson. After a brief consolidation, again, stock managed to give breakout of 7-8 days consolidation range. Stock is comfortably holding about to its near-term moving average of 20-day moving average. And looking at the breakout, we believe that this stock has potential to extend gain, possible upside towards 156 to 158 we may witness. So one can buy with stop loss of 146. The second stock is Titan. Continuity of uptrend, series of higher top, higher bottom formation is taking place. Stock is almost trading now near to its all-time high trajectory. And looking at the trend towards the end of series, we believe that Titan has potential for another up move towards 48.20 to 48.50. One can buy an equivalent with stop loss of 46.85.
Rajesh, thank you for that picks and the update, and we'll wait for tomorrow's expiry. Thanks for joining us today. But the internal inquiry of HDFC Bank has come out with some conclusions, and joining me is Ankur Mishra to give us the details.
Yes, finally the details of MSRDC internal review are out, and first time HDFC Bank has actually taken action on some of its employees after finding what happened in the row. Although the bank is maintaining that it was more of a business overreach rather than any malified intentions, but it has imposed penalty of 1 lakh each on 3 of the employees, which includes MD and CEO, CFO, as well as retail head. So overall, what bank is saying that they have done the thorough investigation. Yes, it may have not been within the RBI directions, but not with malified intentions too. But first time you would have seen ever since there was resignation by the former chairman of HDFC Bank, the bank has actually taken strong action even on the malified intention, and therefore bank has imposed a penalty now on 3 of its employees.
Good. Any idea on what basis the penalty has been calculated?
This is more of a not any calculation based penalty, but a notional kind of penalty which has been imposed on its employees, more to show that they are very serious about the governance issue. There is no calculation, because normally such kind of penalty it comes from regulator on banks, and that is based on the calculation. But here it is more of a notional kind of penalty, where bank is admitting yes, there was some divergence, there was some kind of overreach which may have been by the employees in their decision making of giving deposits to MSRDC. But having said that, they are saying that the malified intentions were not there. So a monetary penalty of rupees 1 lakh, you would understand the amount does not matter, but the action which has been taken by the bank, yes, it is signaling that they are serious on corporate governance.
You have an information on which committee probed the entire thing? Is it the NRC, or is it the governance committee which looked into the entire issue and before coming out with conclusion?
This was a special disciplinary committee which was there by HDFC Bank, which took a thorough investigation into the matter ever since there were reports in the media that the commissions were paid. In fact, the ceiling for deposits was increased just for a special customer, and that was MSRDC in this case. And after that investigation, the thorough finding says that the bank has not diverted from any of the practices. There was no malified intentions, but it was not NRC committee. It was a special disciplinary committee which was organized by the bank, and now the report is out.
Does the NRC now look at the extension of the CEO, given that the disciplinary committee sees some violation in governance which has come in?
Yes, sir, that is the moot question which everybody is asking, because even during the earnings call, that was one thing which remained unanswered, and what happens to the next MD and CEO. Having said that, the current CEO, the committee has not given any name, but it is maintaining that there is an imposition of monetary penalty of rupees 1 lakh. The case for reappointment of MD and CEO, which was even stronger. There were reports that he might be once again considered for MD and CEO. And at ET now, we have been consistently reporting that no board approval has been taken so far. There has not been any discussion on MD and CEO reappointment so far. So yes, it needs to be seen whether or not NRC would like to consider the current MD and CEO, and especially after this monetary penalty which has been imposed on MD and CEO.
Ankur, just hold on. We have Sriram Subramaniam of InGovern also joining us. Sriram, how do you look at this entire episode, given that there's an internal disciplinary committee coming out with some findings and finding not just the CEO, CFO, but also the retail head? And how will the RBI look at it? Because if the NRC, do recommend Shashidhar's, extension, how will the RBI should be looking at it?
Good afternoon. Firstly, I think this is more of a internal rap on the knuckles by the board, so to say. So voluntarily, the board has a committee, set up a committee, and whatever findings they have done, they have just given a small warning letter. It doesn't. They have not disclosed exactly what was the involvement of the MD, but the group had retail assets definitely may have been involved, and so they have fined this 1 lakh penalty. But I don't think RBI will look at it very, very negatively. Maybe they will, to the extent of holding individuals responsible for this or anything, maybe the RBI may put a small fine on the bank or whatever, and then this. As has been said in the past also, there is definitely this was a common practice in the banking industry, these sort of marketing this one, and so I don't think this will be viewed as a big violation by the bank or so. And I don't think this incident will impact the reappointment of Shashi Jagdishan itself. I hope the board and the NRC quickly decide, because investors are waiting for whether Shashi Jagdishan will be reappointed or whether there will be a new CEO, if at all. So I think that is hanging fire.
Sriram, currently the worry seems to be that you've got all of these issues one after the other, which HDFC Bank seems to be addressing, all of them from a corporate governance standpoint. Do you believe that things are kosher, just given the fact that these clarifications keep coming out and they've got to do these internal audits and they're getting green lights for it? Really, that's the worry with regard to reappointment, that if you've got to keep doing that, then is everything kosher at HDFC Bank or not? It certainly doesn't seem to be from an investor perspective, because the stock price has really taken a badgering.
Yeah, I would think, business-wise, if you see the business metrics and the like, everything seems to be fine as far as profitability goes and the like, deposit growth and the like. But obviously, these governance issues which have been raised, especially since the chairman, Mr. Tanu Chakraborty, raised them. So I think at least the bank has worked towards closing them quickly and moving ahead. And I hope the CEO overhang also goes away quickly, because there is only time till the end of this year. So the earlier the bank communicates to investors, because they would also need to seek RBI's approval. So the earlier they communicate to the investors, the better off it would be. And the overhang on the stock can, at least on this CEO account, can go away.
Sriram, hold on. We have Mr. Jain Gupta also joining us. Mr. Gupta, the company's internal committee, a disciplinary committee, comes out with finding and imposes a fine. But does that prevent RBI from investigating this? Even though it may be an industry-wide issue, according to the RBI rules, you cannot give differential rates to customers.
Thank you for having me. I will start by saying that governance, if you want exceptionally good governance, even one comma or full stop should not be here or there. But then, is that practically possible? The answer is no. As Sriram was talking, that competition and blah, 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 all these things are there. So as you have rightly said that if you differ in all other places, probably you will find 20 more instances. But the fact is this, yes, there is an issue. You can call it an extremely minor issue, a procedural issue, or something. But when we examine governance from the two important perspectives, risk and loss. Now, in this case, I do not find that any of the tick happens. The bank was not to put the risk in the financial terms. There is no loss. In fact, the bank got deposited. But yes, there is a technical violation of RBI regulation, something like this. So as you have rightly said, if RBI wants, they can investigate. But then again, the issue would be, at the most, the penalty will be in terms of fine, 1 lakh, 2 lakh, 5 lakh, 10 lakh, whatever it is. So I cannot go to the amount. It will be up to the RBI. So from my perspective, when I examine it, I will conclude that yes, there is a problem. But the problem's magnitude or problem's repercussions are such that it can be lived with. But if you ask me 100 out of 100 marks, so you will not give me 100 out of 100 marks there because there is something issue. That is one. The second thing is this, that RBI has to look into the issues. All these issues were there when the banking was not as advanced as it is today, when the competition was not as deep as it is today. Because earlier you had only few banks. Today you have banks, you have payment bank, you have small finance banks, and all other things. You have got so many avenues of investment. So as a result, banks are certainly finding it tough to compete, because a small finance bank can offer a higher interest rate. Now you looked at the balance sheet or P&L of all those small finance banks or something, you find their profit margin is humongous, because they can lend at exorbitant rate of interest, whereas HDFC, SBI or something, they cannot lend at exorbitant rate of interest. So there is a problem, because since I can lend at exorbitant rate of interest, I can pay higher rate of interest also. So if I am able to pay higher rate of interest, HDFC Bank, State Bank, all other things may not be as competitive as for the I am there for the deposit taking. So RBI has to, you can't regulate one arm or one type of bank and not regulate other type. So you have to, my request to RBI would be that please examine all the regulation related to banking system in a holistic manner. I give you a very simple example. In RBL Bank, RBI has permitted 75% ownership to a foreign entity, which was not there earlier. And they have treated it equal to as if it is a 100% owned branch in India. So now these are the things which are one by one or one, two issues that RBI is doing. Make a regulation holistic, make a regulation based on what is the present day position.
Mr. Gupta, does that give a bank the license to induce deposits in a different manner? Means I just wanted to understand. Of course, there is there is this issue about the cost of funds and the way you are going to lend at what rate, and it's all about competitiveness. But how does that give anyone the license to use multiple ways to attract deposits?
Hello, I couldn't get the last part.
How is that the argument that because there's a hyper competition, there is the issue of getting deposits and the deposits pool is very limited. Is that an excuse to induce deposits?
Not at all. Again, I am saying, as I said in the beginning, I am not giving 100 out of 100 marks in the governance. I have already said that. But again, what happens, when something is a problematic in the market, one way is to punish the person who has created the problem or something. But other way is to find out what is the structural issue because of which the problem is occurring. See, you may penalize X person, you may penalize Y person, but are you killing the problem? You're not killing the problem because tomorrow ABC or JN Gupta or you will do this. The issue is that let us get into the deeper. So that is why I always say, whenever there is a problem, one has to get into the root of the problem and remove the root, not cut the top branches.
Just hang in there, Mr. Gupta. We also have Mr. H.P. Ranina joining us. He's Advocate Supreme Court. Mr. Ranina, how do you see this from a governance point of view, and how will the regulator look at it?
Well, from a governance point of view, certainly they have followed the procedure. They have got the independent directors to investigate the matter, and then they have come up with the certain decision of levying a fine on the CEO and the others. So governance point of view has been taken care of. How the RBI regulator will look at it will have to be seen whether there's been any specific violation. RBI will take a strict view. Has there been a specific violation of any of the guidelines or regulations or any circular issued by the RBI? If at all, then they'll take whatever action they think fit. But this is a matter of facts. So actually, they'll have to go into all the facts and then come to a decision.
Mr. Ranina, but clearly not looking kosher, right? I mean, this divergence of sorts, should it worry an investor?
In a sense, yes, it would. But then if there was not for any mala fide reason or not for any personal gain or personal profit, but it was what they call overreach, business overreach, then that is something which the bank will have to now issue new guidelines to make sure that there's no further overreach in future. That is the only action that they can take. Apart from that, they have to be more cautious, more investigative, and they have to be very alert and don't allow things to build up, because this is an issue of 2017, 2021. We have 9 years ago. So that is something has to change now. They have to be vigilant on a continuous basis.
So, Mr. Ranina, just trying to therefore understand, typically when a divergence like this happens and some consequences like this are put out, how should one look at? One is, of course, the preventive side of things, that hopefully this should stop any future issues from occurring. But just from a investor lens, this doesn't give or lend enough credence, right? Because you've already admitted that this is a fault, and the fact that there's been a default there.
Yes, of course, obviously, they will have to some extent, suffer the consequences of that. But at the same time, like in every other corporate body, lapses are continuous. You have to make sure that they don't repeat. You have to learn from your past mistakes. So long as the investors know that things are not going to be repeated, that they are going to learn their lessons, that this is an eye-opener for them, and therefore they will then take a better view. So investors also have to be satisfied that this will not happen again. And in a way, this was a wake-up call, which they have answered, and things will be better in the coming year, in the coming days.
Mr. Ranina, thank you so much for your view. Mr. Gupta, we'll let you go as well. We have Mr. Sanjay Hegde joining us, Supreme Court advocate. Sir, give us a sense, how are you looking at this latest development with regard to HDFC Bank? Clearly not looking fully kosher, right? I mean, there's some bit of admission out there as part of the release?
Well, of course, it's not looking fully kosher. It's like that classic expression, a little bit pregnant. The point is either there has been a lapse or there has been no lapse. So what the bank seems to indicate is that there were lapses, but they were not lapses of such a major kind as to invite any criminal action or any compensatory action altogether. The officials have been left off with a warning as well as with a deduction from their paycheck. Now, this to some extent goes to vindicate the former chairman, Mr. Atanu Chakrabarti, if memory serves me right, his name, his resignation. So he did see something which was not particularly above board. He must have raised his concerns internally. Those concerns must not have been adequately addressed, and he resigned. Now, after getting in external counsel to review everything, after reviewing everything and announcing that everything was hunky-dory, nevertheless, ex abundanti cautela, that is, out of abundant caution, if you still caution your employees and your CEO and all that, and even deduct some portion of their salary, there is at least an admission that everything was not, while things were not illegal, there were things which the bank itself calls overreach. Now, it's always a fine line between what is overreach and what is illegal. The bank thinks it was merely overreach, and that a censure should suffice. I do see that this thing can go on to become a bit of a problem, especially in October, when I believe the term of the CEO is up for extension. These factors will also no doubt come into play then.
Okay, Mr. Hegde, thank you so much. This gives us plenty to digest and think about. Thanks so much for coming in and giving us that perspective. We'll also thank Mr. Sriram Subramaniam of InGovern for coming in and giving his views. But completely timed out on this edition of Market Edge. Very likely, we'll be very interested to see how Tuesday's reaction to trade is where HDFC Bank is concerned. But it's a goodbye from Sajid, myself, everyone who puts this show together.